Board, Mark Mobius, partner Mobius Capital Markets, to talk a little bit more about the second wave, as well as the gush of liquidity and what we're seeing for the India story. Mark, appreciate you taking the time out. Clearly, we've been now bombarded by the second wave. Back home in Mumbai, things have come to a complete standstill with this lockdown being imposed in the state of Maharashtra. This is definitely going to have a cascading impact on the economic growth, don't you think? How are you looking at the story of the Indian markets versus what is going on with the second wave of COVID? Does one have to detach themselves from these two?
Well, there's no question that the lockdowns are very, very bad for the economies, not only in India, but other parts of the world. And people are beginning to question the rationale for these lockdowns and what is the scientific evidence that social distancing, masks, and all the rest of it really helps and prevents the spread of the disease. So I think this is one question that is up in the air. And more, if you look around the world, people are beginning to resist this kind of lockdown measure. And if you look, for example, in the United States, in some states, such as Florida, they've done away with all of these restrictions. And there hasn't been a significant increase in terms of deaths of COVID. So I think this is something that we have to look at very, very carefully. Nevertheless, even with a lockdown, the impact on the stock market will not be significant. Because as we've seen, since the beginning of last year, since March of last year, markets have performed very, very well, despite the fact that there were lockdowns in other parts of the world. So I don't think that's going to have a big impact on the Indian market. And in fact, if you notice, the Sensex and the other indices of the Indian market are moving sideways, not down necessarily. And that will be just a respite where we'll see a sideways movement, and then you'll see the market recover and move up again.
So, Mark, what's your view when it comes to the overall portfolio allocation? Do you think that equities should still form a bulk? And would you be sticking with some of the tried and tested large caps? Because if we're looking at the impact that we've seen from the last year, sectors like financials and banks have been severely hit. So what is it that you're advising when it comes to large cap allocation?
Well, actually, I'm not looking at a large cap, basically. In India, we have medium and small cap. Companies like APL Apollo and companies like Persistent Systems, etc. So these are medium cap companies which I think are going to do very well in this kind of environment. So we have not been focused on the large cap, and these medium and small cap have performed very, very well.
Mark, purely on a macro basis, the one thing that one is noticing, and, there's data to prove so, is that mortality rate in the second wave in India is much lower than we saw during when the pandemic actually broke in India. So in that case, would you say that fears of a prolonged economic impact are justified, or would you say that the market is a little bit overreacting right now?
I think the market is taking the short-term views that they're seeing in the press and so forth, and they're taking a too short-term a view. And this, as I say, will be temporary. We will see the market recover very quickly.
Sure. Having said that, you think that there could be a case of GDP numbers being scaled down if the second wave is not arrested soon enough?
I don't think so. I think the GDP numbers are going to continue to rise as the economy recovers and as India reaches the 5, 6, 7% growth rate that we saw in past years. So I think we're still in the economic recovery stage, and that will continue going forward despite any new variations in the COVID situation. I believe that people are getting back to work. There will be temporary shutdowns like we're seeing in Maharashtra, but this will be temporary. It will not last.
Hope so, definitely. Mark, the other thing which is a niggling worry is that there is no FII supporting this market right now. Month to date, what we've seen is, or for that matter, even in the month of March, FIIs have been net sellers and a little exaggerated, if I can call it that, at least in the month of April so far. Do you think that's also because of what's happening in the currency markets? The fact that the rupee as pegged to the dollar is at an 8-month low, and that is also weighing down on sentiment of foreign money pouring into Indian equities?
I know there's no question about that. You're absolutely right. The currency situation has a big impact, particularly on the fixed income segment. They look at that very carefully. For the equity segment, I would say most of the equity investors are inured to a weak currency and will look at companies where there will be a benefit to a weak currency. In other words, companies that are exporting, et cetera. As you know, the software giants in India have been doing very, very well on the back of local weak currency and strong US dollar, vis-a-vis the rupee at least. So I don't think that will necessarily weigh on the equity side of things. There will be some people reducing their holdings, but generally speaking, a lot of this is the currency effect. You must remember that if you're looking at the currency from the outside, sometimes you will hesitate before putting money in. But people like us who are long-term investors, we will not make any move. In fact, we might even increase our holdings in the face of weak currency.
So the question is, Mark, if you do believe that India is a buy on dips market, is there a level on the Nifty that you've pegged it at, or is it more an individual stock-specific case-by-case story that you're tracking right now?
It's really an individual stock by stock. We don't buy the market, we buy companies. But even if you are looking at the index, you will see that, yes, there's a sideways movement. Of course, we've had a big move up. And whenever you have a big move up, after a few months, then there'll be a respite and you'll see a sideways movement. But I think it's just a sideways movement, not a down movement that we're looking at. And going forward, the market will recover and continue its upward rise.
So what would you be tempted to buy on further dips, if at all, Mark? Would it be the cyclical theme? We all know what's happening across the commodity universe, not just in India, but now especially with Biden announcing that $2.3 trillion infrastructure package. That's augured very well for the sentiment per se across global commodities too, and back home in India as well, wherein most believe that even after the 13th price hike that most steel majors have undertaken, there is further headroom to go. Would it be that pocket, or would it be the traditional defensives? I'm not sure if I can call them defensive still, but IT Pharma, which would be the favored bet?
I would say IT Pharma will continue to do well, particularly in the software arena. I think the software companies will continue to do very, very well going forward. And you must remember that India is now embarking on a digitalization, which of course has been ongoing, but will accelerate as we go forward. So companies that are involved in that or who are taking advantage of the digitalization movement will do the best. And by the way, that includes some traditional industries. It doesn't necessarily have to be a software company, but it can be any industry which is taking advantage of the internet and digitalization.
What about your sense when it comes to the pharmaceutical space? Do you think that with the focus on COVID, because a lot of corporates within that sector seem to suggest that that's where a bulk of their overall revenues are coming from, that there is a chance for strong growth? Where within pharma are you sensing opportunity?
In pharma, I would not focus on vaccines, but I would focus on treatments, because we're now discovering that there are a number of traditional medicines. I don't mean herbal medicines or anything like that, but the traditional modern pharmaceuticals, which are beginning to work and are beginning to help cure COVID patients. And that's an area where we have to look. because this could be a very good long-term idea for people looking at the pharmaceutical arena.
And do you believe that there is merit as well to pick up some of those PSU stocks with the government privatization drive now gaining momentum and a lot of talk and intent being focused towards this?
Yes, the privatization program is very, very exciting and could yield some incredible opportunities for equity investors. We have to, of course, take this on a case-by-case basis and ensure that any privatization investment is really free to operate as a private entity without too much government interference. Those opportunities can be very, very exciting, particularly in the medium-sized companies where the government really is not interested and doesn't have any need to impose any rules or regulations in the way the companies are operated. So I think that's an opportunity that we have to look at very carefully.
Mark, what happens to financials? Because it's a bit of a tricky scenario now with the second wave as well, picking up. While the COVID spike definitely could delay some of the credit cost unwind, but non-banking lenders, their outlook or guidance could actually improve going forward. And also life insurance, protecting pricing, ULIPs, that sentiment is going to matter.
Yes, I agree that if you have a change in terms of business viability, then some of these non-bank financial institutions could do well. As you know, the risk is very, very high at this stage of the game because many of them are sitting on an incredible amount of losses and loans that will never be repaid. But that's why you have to look very, very carefully at what particular segment these non-banking financial institutions are financing. So, for example, just to give an example, used vehicles is probably not a good idea unless you really know who you're lending to. But some other segments, maybe heavy construction equipment, that sort of thing could be interesting. Again, it depends on who you're lending to and how the due diligence is being carried out. So there is a great opportunity there. There's no question, but there are many traps that you have to be very careful about.
That's the other segment that I wanted to speak to you about, autos at large, because, while for the fourth quarter and because of the monthly data coming out, one is seeing that passenger vehicles as well as two-wheeler volumes are amiss. Also, trucks, though, have managed to, overshoot expectations. That's commercial vehicles. But you think the niggling worry here could be the input cost pressures, and that could weigh in on margins as well as earnings?
Yes, of course. The input costs are a critical factor when you're looking at this. But as I mentioned, if you look at the industry-specific areas, particularly those segments where there is a need, a catch-up, so to speak, for such things as heavy equipment, trucks, that sort of thing, which are going to have an increasing demand as we see the recovery moving forward. That would be an area which could be most interesting, I think.
The other subject that I wanted to speak to you about, Mark, was the infrastructure and economic revival themes. Cement, for instance, while there has been encouraging demand recovery, even as prices and costs have disappointed, there's also operating leverage at play. But that could get challenged given the statewide lockdowns and curfews and curbs which are now being put in place. And that, unfortunately, is going to only reflect in the next quarter's numbers.
Yeah, that's a real issue. If there's a lockdown or shutdown, particularly for the infrastructure projects, that would put pressure on cement prices and construction materials in general. But as I said, I don't think this will last. I think it'll be temporary because these states all over India require a better infrastructure. They know they have to move ahead with that. And the government program, of course, is focused on infrastructure to a great extent. So I don't think this will last. I think you're going to see a recovery in all these inputs for infrastructure. And India needs this desperately, and I believe it will go ahead.
What happens to consumer durables at a time like this? And again, caveated here because there would be the COVID-led challenges because of the curfews and lockdowns put in place. But do you think larger players, while they continue to drive multiple changes to realign their presence and more so digitally now, there could be some consolidation beneficiaries in the space?
Yeah, the interesting thing about the consumer durables is that during a COVID crisis, people tend to spend more time at home and therefore focus more on these durables in their homes. Therefore, the demand should be building up for such things as we go forward. And I believe that you're going to see some of these companies focusing in that segment should do very well. If they're not already doing well, will probably be doing well going forward. This, by the way, is related, of course, to interest rates. As you can see that the Fed rate and the rate of the Reserve Bank are very low. The rates are low, and that means consumer financing could move ahead for these consumer durables.
Fair point. What happens to consumer staples then, Mark? Because, beginning of the first wave, what you saw was a huge spike coming into the consumer durables segment, and especially, more so packaged foods and, companies which were smart enough to up their digital presence, keep their supply chain going through, and more so with the innovation of, small unit packages, which really did well, especially in the tier 2 as well as tier 3 towns. You think a similar pattern could be witnessed now again with these lockdowns happening across states?
Yes, I think the difference here is that for these consumables, the consumption has continued throughout this period because of the delivery ability. In other words, companies and retail shops can deliver to the home. So I don't think you're going to see, even with an end of lockdowns, a big spike up in these consumables. You'll probably see it moving at more or less the same pace as we see now, with some exceptions. But I think what you've got to do is keep an eye on the rice prices as the staple. And if you see at least a steady or even downward movement in rice prices, then other consumables could benefit, and you could see a spike up in demand for some of these other products.
Tactically, Mark, would you be betting on economy-linked sectors, cases in point being engineering and capital goods? There is the cyclical turn, which is at place over there. But again, these challenges coming up now with the second wave of the virus.
I think those companies, and we already have one of the companies involved in this, Apollo Tubes, are going to continue to do very well because, as I said, the requirement for infrastructure in India is almost infinitesimal. It's unbelievable. It's to infinity that you could fund more and more infrastructure in India. So there's not going to be an end to this demand going forward. And I believe with an economy that is going to be reaching 5 or 6% growth, the expenditure on infrastructure will continue and probably accelerate.
Sector that I wanted to discuss with you, Mark, was the entire home decor segment, if I could call it that. Everything from your pipe companies to paint companies to sanitary ware companies to tile. Because, about 2 quarters back, what one saw is because of everyone working from home and staying at home, they felt the need to try and beautify their homes. And this segment actually turned up doing very well. Paints, irrespective of their expensive valuations, posted excellent volumes growth. Where is it that you stand as an investor in this entire segment?
That's an interesting point. I think you're absolutely right. People staying at home begin to think about redecorating their apartments or their homes. And this, of course, drives prices of all the materials needed, whether it be curtains, rugs, paint, light fixtures, furniture, etc. We haven't been able to find a company meeting our requirements in terms of the fundamentals in this area. Most of them are rather small. There's some exceptions, but we have not found the right investment in that area. But I wouldn't discourage anybody from looking at that and investigating it more carefully, because companies like paint companies, companies that are doing furniture might be an interesting entry into that sector.
The other sector that we just spoke about, Mark, earlier, metals. While the good is definitely getting better, but is the best yet to come?
Yes, no question. Demand, you can see what's happening with all these commodity prices, which is a reflection of these materials downstream. And you'll see that all these prices are up, and even in the areas like palladium, platinum, etc., they're all moving up very quickly.
Mark, in terms of portfolio allocation and the way gold prices have moved year to date, and the fact that they've been very lukewarm, or for that matter, the kind of returns Bitcoin has made in the last 1 year. Is it imperative to now have some portfolio allocation to Bitcoin and continue with investments in gold as well as an asset class along with equities?
I don't think Bitcoin is a good asset class for the average investor. And the simple reason is that to convert Bitcoin into cash that can be used is an extremely difficult and even dangerous proposition. As you know, the U.S. government is after many of these Bitcoin exchanges. So this is something I would not recommend. However, gold at this stage, at this level, sounds like a good investment at this stage. In fact, I've added some gold to my own portfolio recently because I think it's reached a sort of a turning point where we're going to see a recovery in gold prices. But even if you're not following gold on a day-by-day basis, from a long-term point of view, you're better off with at least 10% or 15% of your assets in gold, in physical gold.
And I'm guessing that would be the same case for silver as well, Mark?
Yes, silver, platinum, and palladium, all three. I would say it's a good idea to diversify in these precious metals areas. So the four key ones would be gold, silver, platinum, and palladium.
What happens to the real estate revival in India, Mark? Because we saw, residential sales and supply actually improve. Again, that could be springing from the need that people are working from home and they need larger houses. But there's been some exceptional data points across the country on how the real estate market really picked up, and especially the residential segment. While surely the second wave could put a bit of a dampener, but would you say that this is a sector which one should stay invested in?
Yes, I think the real estate sector is very, very interesting, particularly in India, because the demand for housing is almost endless. You're not going to see a let-up in demand for many, many years to come. As you know, many, many Indians are living in substandard housing, and they want to do better. And as incomes rise, which they are doing, there'll be a greater and greater demand for housing. The issue now in the housing market, of course, is having a system of registration which is reliable, and a system of financing these houses and apartments, which is, again, reliable and tractable. This is the big, big challenge for not only the federal government, but the individual states. In fact, there's been one idea of using blockchain to track ownership of houses and apartments, which may be one innovation but there is a dire need for better real estate records and record keeping. In fact, one system that I'm familiar with in the U.S. is a system of title insurance, which might be an answer for India going forward.
Market seems to be nothing but gloom and gloom for certain sectors, particularly travel, hospitality, or entertainment related. Do you think that these are good stories to nibble into at the current level when they are looking fairly mouth-watering? Or do you think that the long-term story is going to be pretty precarious and for now you wouldn't venture into these spaces?
I would say yes, now's the time to begin investing in some of these companies, whether they be an airline, whether it be a cruise company, or whether anything related to travel, because the travel market will recover. There's no question in my mind, because people have an incredible desire to travel, and this will not end. So I would say, yes, if you're willing to be patient, not expecting short-term 1 week, 1 month returns, then definitely looking at the travel sector would be an area that could hold tremendous amount of profits.
Okay, yes, I myself can't just wait to hop on a plane and get out as soon as things normalize and stabilize. And Mark, incidentally, there's been that IPO gush as well that we've seen in India. Indian companies have raised close to $2.2 billion via IPOs so far this year. That's the highest amount that we've seen since 2008. And, the third biggest behind US as well as China. What have you made of the recent IPO gush, and would there be any specific business models or companies that you would lean toward?
Well, the IPO revolution, or big move up globally, is really a sign of the amount of money available globally to invest in such IPOs. There's an incredible amount of money sloshing around the world looking for a home. And that's one of the reasons why the stock market is up, one of the reasons why the Bitcoin prices are up, and the reason why many of these other assets are going up. Now, what we have to be very careful about is the cryptocurrency arena, not only Bitcoin, but other cryptocurrencies. I fear that if there's a downturn in the cryptocurrency prices, particularly Bitcoin, this could be very bad for markets generally, because many people are feeling very wealthy based on their Bitcoin holdings. But when those prices go down and they try to exit, it will be very, very difficult, and it could be disastrous. So this is something we have to watch very carefully. Of course, any bear market like that will be temporary, but it will be quite damaging, let's put it that way.
Mark, such a pleasure having you on the show today and patiently answering all of our questions. Good to speak with you as always, and stay safe.
Thank you very much. Nice seeing you.